Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a bit of a dewy, wet morning here in Denver, Colorado, but a lovely morning nonetheless. Today, I am pleased to be joined by my friend, Schwab's regional investment strategist, Mr. Jeffrey Abalos. Jeff, it is great to have you back, man. It's been a little while. How are you?
I'm wonderful now that I'm here with you, my friend. Really good to be back. Thank you very much, as always, for having me. Hello to all the viewers out there. And as you know, Kevin, I am in Arizona this morning. We should be hitting a high of 105. So for those of you across the country that don't get to enjoy that summer fun, come here anytime. It is spectacular. Thank you very much for having me, though, bud.
You're just dabbling with a little heat. Nothing big.
Yeah,
just
this is it's a little shtickle of heat right now for us here in Arizona. Wait until you get into July and August, and maybe I might be singing a bit of a different tune.
Yeah, probably will. Yeah. All right. Well, we've got plenty to get to, as we always do, especially on a Monday after the weekend. And looks like we've got a little bit of a green start to the day today. So we're going to look at a bunch of charts with all of you as we do. It's what we do here on Trader Talk. Say hi to Mike Fairborn there in the chat, everyone. He'll keep an eye on questions and comments that Jeffrey and I are unable to get to, but so will we keep an eye on the chat. We'll try to bring those comments and questions that are pertinent to the discussion right in here, everybody, and hopefully we can address a number of those for you today. If you're not already doing so, you can follow Mike and me in X. I'm Kevin Horner CS. Mike is at Mike Fairborn CS there as well. We try to post for you throughout the week. Last week, at the end of the week, I got a little wild hair, and I posted a bunch of charts. So if you were looking through my timeline in the last 3 to 4 days, it has been a very busy posting period for me. Bunch of different charts to check out and just some interesting stuff on the table. So the market's been offering a lot of those opportunities for us of late. So I always find that to be a little bit more interactive and engaging on X. So hopefully you're getting something from those as well. We're going to get to disclosures very quickly here so that we can get into the part of our discussion you are all here for. Certainly, remember that our discussion is exclusively for your information and your education. We do not make recommendations nor endorsements for a specific approach to trading the market here. Additionally, while we talk technical analysis and discuss concepts and strategies traders may choose to employ, we do not encourage you to utilize technical analysis as the only means of your research. Simply put, we think it can be a big piece of your puzzle, but you should base decisions off a multitude of criteria, not one thing specifically. If this is your first time joining us on one of these sessions, this is the agenda we work with. We start with a top-down methodology. What that means is we go broadly through the major indices and then into sectors that are moving, potentially some industry groups. And we always like to wrap with stocks in the news. We've got some names that you're going to be familiar with in downgrades today. So that's kind of the plan. That's level setting. Let's get to the stuff that we are here for, though, Jeff. How about the S&P 500? We closed and dabbled right at 6,000 there on Friday, Jeff. I know we touched it, but the big question on traders and investors' minds is this now a path of least resistance to all-time highs?
That's a really good question. I think we all want to know that. And of course, I have no idea what the future is going to hold. But you're right. Of course, a lot of traders out there and a lot of investors for that matter, they're eyeing that 6,000 level. Are we going to break above it? Are we going to get below it? Now, what concerns somebody that's on the bull side of the argument in most cases is going to be, well, let's say we do break past 6,000. You also have a potential resistance at that 61.47 level, that all-time high that you see there. So if you do get a break up above that potential resistance at 6,000, you also have another resistance that you're going to have to come up against. So this might not be a time where people get overzealous and say, oh, okay, now that we've broken that 6,000 level and we find it potentially as new support, things are just going to be hunky-dory. It could actually mean that we have more upside resistance that we still have to overcome, Kevin. So it could be a bit of a difficult summer for those traders out there trying to find that bull argument for why we should continue this pattern.
Well, it's certainly tricky because as you move into new highs, traders want to try entrance into these, but they also don't want to be inverted on risk versus reward. The true level I think that many are monitoring, and one we've been talking about on this show, is that 20-day moving average. It's about 180 points away from where we are. That's a lot of downside risk to take on for the potential of 150 points to the upside, meaning quite simply, Jeff, for a lot of traders in the interim time frame, shorter term, if you broke the 20-day on a close, and that again is the orange line we're seeing here, everybody. If you broke that on a close, that'd be the first time since late April that we've done that. That would be a significant development. But the truth is, for many traders, Jeff, everything that happens between 6,000 and 5,920 is non-determining, meaning not giving you any inkling as to what might come next, right?
Yeah.
So that if that's the case, how do you build a valid way to move into long side positions that can target the upside here? Unfortunately, it means you got to pick a shorter exit strategy or a tighter point at which you would say, I'm wrong and I'm going to move on. Doesn't feel like risk versus reward is really great right here.
Yeah, you're right. It's tough. And the longer that something like this takes to come to fruition, the more difficult it might be. Now, for a lot of you out there, you know I love to do research. Kevin, I shared this with you a little bit earlier this morning. So this is from thepatternSite.com. It's Bolkowski. For those of you that are into technical analysis, you know this name well. But he talked about continuation patterns outperforming reversals in all market conditions. So in bull markets, an uptrend with upward breakouts averaged 11% returns versus 10% for reversals. But this was the one that caught me in this realm, and I've got more to share throughout the show, folks. So failure rates in a bull market after an upward breakout, 32% fail to rise at least 5%. Now, what are we looking at here? Well, that could mean that if we have a break above 6,000, we might have a 2/3 chance that it goes above 5%, but we've got a 1/3 chance that it fails to even go up 5%. I don't know what the number is between 6,000 and 6,147, but I would say that's going to be capturing a good, decent amount of the story as we look forward to see, gosh, this doesn't have a whole lot of upside movement. Now, I'll share something else in measured moves a little bit later, Kevin, but I think I will say, though, to the positive side, there is some short-term momentum that a lot of traders are seeing in the form of the 20 being above the 50, 50 being above the 200. So you do at least have that going for you. And then, of course, getting above that 6,000 level, I think that's always something to cheer when you can get a very easy win, a psychological test, and then break above a level that used to be your resistance, Kevin.
Yeah, I like what you're saying there. Let me put some detail to that. You mentioned a 5% potential move through 6,000. That would be a 300-point move for the record.
Okay.
So up to 6,150, that's a 2.5% move. Nobody would be surprised by that. Again, given the nature of our rally, I think many traders would suggest that the path of least resistance is to the 6,150 area. That doesn't mean you're going to make a new high. Doesn't mean you're going to close at a new high by any stretch. But a move through 6,150. Now you're talking about more upside, Jeff. So what I liked about what you're saying, though, is it's a good, healthy reminder of the difference between trends that are in play and already working, continuation moves, right, versus those that are reversing. And it'd be really hard to say that what we're in the midst of right now is anything other than a bullish or a very strong bullish rally off of our April lows. So some consistency here, more of the same, kind of a flat open at this point this morning. But I think for many, watching that 59.17 area and the 20-day moving average is going to be very important on the SPX here for probably for the week. Hopefully it's one we don't visit this week. We'd like to see some continuation moves here. All right, let's pipe into the NDX, Jeff. I've got a bunch of lines drawn in here. I'm going to pull back on my Fibonacci's because we are so clearly at a level now where the Fibonacci's seemingly don't matter anymore, Jeff, because we've made back 85, 90% of the move that we've made. We do have that band of resistance at the 22222 area up here, 22,222 all-time highs on the Qs. Or excuse me, on the NASDAQ 100 here. But we're, again, watching that upper level and trying just to say this is not a rising wedge, but it does have the appearance of a rising wedge at an area of potential resistance.
Yeah, I think you're right. And I'm sure for a lot of folks that have watched this show before and that do technical analysis, eyeing up that all-time high in we'll go with, what is it, 5-2s? Got a couple different names we can come up for that, but that's probably going to be capturing a lot of the attention and a lot of the story for traders of the NASDAQ. Now, what might somebody who's trading be looking out for? Well, this could be where you start to play small ball, or as some people like to call it, trading the candlestick. So if you're a candlestick trader, this may be where things really start to come into play. Oh, okay, is tomorrow going to be the day where we hit the 5-2s, or do we break down a little bit? But of course, like you mentioned earlier, Kevin, and I love this, watch out for that exit strategy. You do not want to get caught with a very limited upside potential and leave yourself exposed on a very, very strong downside risk. For those of you who are thinking of the bearish move, maybe you wait for a bump against that resistance level and say, okay, now that we've hit that level, my thesis is we are going to come down. So what is the risk to reward? It's just flipped. My risk is that it comes above that breakout zone, but potentially down to something like the 20-period simple moving average. So there's something for everybody here with both a bull and a bear trade potential.
Yeah, there is. And yet, I mean, I'm looking at this trying to find proper risk and reward one way or the other. And it feels like if we were targeting the 20, you know, I'm going to lift these lines here. If we just looked at where we are, 21,750 up to 22, let's call it 250, that'd be a 500-point upside. But if we are at 21,750 and we're looking down to the exit under the 20-day, we're about, let's see, 375 points away. It's still not great risk versus reward. We're probably taking more risk for a potential to run into resistance. We want to look for, at least I should say, commonly traders try to find $1 of risk for $2 of upside or more if you can get it, right? So, these situations where you're kind of mired in between things, it's a little difficult to start new positions. And so some traders will start to piece in here just because they want to limit their risk, recognizing that the risk reward scenario is a little inverted or not ideal. But there is a fair bit of support, Jeff, at the broken resistance that we had here last week with this move. So that's around 21,450 or so. Ballpark that is, and you'll notice the 20-day getting caught up into that area as well. The tighter you can make your exit on new money like this, the better your risk versus reward becomes. And of course, the only reason we talk about the 22,222 level is because it has been the stopping point for the last rally. It could easily be the stopping point for any subsequent rally. Doesn't mean we have to, of course. If we broke through that level, man, we could be off to a pretty good run thereafter. But that bears watching for obvious reasons, I think, Jeff, right above us. So now, last week we got a pretty great finish as it relates to the small caps. And I think looking at the small caps is a really fun move today because not only have we broken the downtrend line, we broke out on Friday with a new short-term high, perhaps the highest we've been since we started the breakdown in March. And now, Jeff, just trudging higher, hopefully seeing that 200-day in the near term here around 2175.
Yeah, really going for it, isn't it? I mean, gosh, and for those of you that are new to the idea of small caps and mids and large, small cap tends to be a more risk-on trade. So when things are getting frothier and a little bit worried, they start to pull back faster. Now, when things are getting better or performing more in line with the bull market, it's at least in the early stages, they are going up, 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 up. So they kind of lead the charge, whether it be higher or lower. And in this case, Kevin, you are absolutely right. Seeing that come up to that 200-period simple moving average as a potential resistance, I wouldn't be surprised if there are a lot of traders that are eyeing that level up. The other thing I'm going to call out, and you've got this on your chart, so I'm going to draw everybody's attention a little lower. You see that relative strength index? Ideally, if you're going to go for a bull market argument, what you want to see is we come into that 200-period simple moving average resistance is a build up a higher move on that relative strength index. So you do not want it bumping up against, we'll call that level 68, 65 or so. You ideally, if you're going bull argument for these small caps, you do not want it bumping up against that level and coming back down. You want it going above that level, because if you can get a break up on strong relative strength, that can be a much better indicator of potential performance versus a break up on weak relative strength index movement.
I love that point. That was wonderful. Thanks, Jeff, because ultimately you're giving an opportunity for traders to look for confirmation that the breakout is validated or legitimized, if you will. Yes, we could find resistance at the 200-day, but Jeff, if that RSI was back over 70, that would be telling us something as it moved into resistance. It would be a little bit of a heads up, because look at the last time we were over 70. It was back here in November, and you can see what the market was doing in the Russell, everybody. We had broken here. We had moved out of that into new highs, and then we have come back to earth, so to speak. But now, if we are breaking the downtrend, breaking horizontal former resistance, potential resistance, now potential support, well, this is giving you the impression that there are better days ahead for the Russell as we move forward based on broken downtrend, broken horizontal resistance, and an apparent improving RSI. So if we can test that 200-day and ideally close above it with an RSI into overbought conditions, Jeff, many would say that that confirms the breakout quite nicely. And if nothing else, it would perhaps give traders the confidence to look at the 2110 area again as true shorter term support. Yes, we would prefer to be above the 200-day, and yet action through the major zone, recognizing that 2110, Jeff, was so important for us historically, right? We have been there before. We've been rejected there before as resistance. It's been a bounce zone for us. This is a pretty positive development for the Russell. We want to see some carry forward for the next couple of days, kind of validating it, I think.
Question for you, Kevin. As I'm looking at this chart, my mind is starting to build up potential patterns. Could somebody make an argument for a reverse head and shoulders that we saw coming from March or so until today?
Jeff, it's possible that you're just, playing games with me, and having watched my show previously, you might just be setting me up. That's a possibility, I suppose. But yes, this is absolutely something I've been talking about because of this exact reason. Yeah, looks like you have a bit of a head and shoulder. And if that's in fact a head and shoulder, well, the level we moved through with Friday's close would be considered by many to be the neckline, Jeff. And if we did the measured move, again, we recognize measured moves are never a guarantee to be achieved. They're just an estimation of what price can do for us. We just measure from the neckline to the bottom, the actual trough, and then just add it to our potential breakout. And Jeff, that suggests mathematically that if valid breakout, we could be at 2465 again.
Wow, that's incredible. I will also say, too, going back to the research, the measured rule, the height projection, things like you're doing now, especially for the big markets, 82% of the time for bull or up markets, they came to fruition. 78% of the time they came to fruition for bear markets. Now, of course, do we know that that's exactly what's going to happen? Absolutely not. But what it does lead to the idea of the odds are potentially better for a measured move coming to fruition, in this case, in a bull market, than not coming to fruition. Ultimately, it's up to you to decide what you're going to do with that. But I do like that call out, Kevin, because so many times we see these patterns and we go, am I seeing that right? The great example here by you, buddy. This is a bit of a messy reversal, I just forgot what the term I was looking for. Reverse head and shoulders? Inverted. Thank you. Good golly, I need more coffee. Inverted head and shoulders pattern, but they're not always pretty. Like when you're looking at a book and you go, oh, that's perfect. Look at how it's forming these lines. They're usually a little bit messy like this. So really good call out, Kevin. And thanks for highlighting that for us.
Of course. Yeah. I'm going to echo a couple other things in here. First of all, I just wanted to speak to one last note about the RSI, and that is the line I drew in there, Jeff, is right at the 50 level. And I always find that intriguing because, as a reminder, bull market behavior tells us, as it relates to the RSI, that when we retreat to the 50 approximation, the 50 level in the RSI, that can act as oversold conditions in a bullish trend. What that means is we shouldn't expect to see the RSI in that 30 level, true oversold conditions in the midst of a stronger trend. And so many would tell you that the fact that we've held 50-day, held 20-day, and that the RSI only came down to the 50 level, that is bullish behavior from a trend standpoint as it relates to the RSI. So they're going to take some positivity from that as well. A couple of comments. Number one, we've got the survey opportunity in here. Would love to hear from you as always. Number two, John the Noble Savage points out that Jeffrey makes an excellent guest. You are not wrong.
Thanks, John.
He does make an excellent guest. I love having Jeffrey on here. Yeah, you're right. I get him once a week. All my regional strategists that join me, I say once a week, once a month, excuse me, are here individually once a month approximately. They're all fantastic. This is just a great reminder of the strength of our bullpen here. Obviously, it is wonderful. So I echo those thoughts, John, entirely. Jeff, Beth is asking if you could just mention the odds. Again, not specific probably to the inverted head and shoulder, but the concept of a reversal rather than continuation, because an inverted head and shoulder pattern, as we see here, if it's valid, that's a reversal pattern, not a continuation.
Yeah, the reversal. So continuation patterns for the S&P 500 and overall markets tend to outperform reversal in all market conditions. So an example, in bull markets, an uptrend with an upward breakout averages 11% versus a 10% for reversal. So a little bit better. I'll also highlight in a little bit what happens on gaps versus pullbacks and throwbacks. But I hope that's the statistic that you were looking for. The other one I mentioned too, failure rates in bull markets. After an upward breakout, 32% fail to rise at least 5%. So that's a bit of a combination of ideally what the story and narrative is from some of what we're starting to formulate, and we'll polish here as we go further into the story through the rest of the show. You really want to see conviction. That's what it comes down to. You don't want to see trepidation. You don't want to see, okay, we broke above and then we come back and test. Ideally, you want to see gap ups, quick movements, what we call tall patterns. So those are the things that you're trying to look for as a pullback to the narrative.
And you know what I also take from that, Jeff, as we move into the SOX here, which we'll discuss briefly, but I just love the idea that it's a reminder of the strength of continuation, right? Mm-hmm. Trend traders look for opportunities that have already begun trading directionally equal to the manner they want, right? So if you're bullish, you want to see a series of higher highs, higher lows, and that gives the confidence to join. But so many traders believe that you've got to be the first trader through the door on a reversal opportunity, Jeff, and your numbers actually say the opposite of that, don't they?
Yeah, that's right. Well, think about it, everybody. If you're going to, let's say, a cocktail party or a birthday party or something like that, do you want to be the first person there? I know I've had times where I've showed up to the wrong house trying to be the first person there. So what do I like to do? I like to make sure there's a few cars out front. Let me know that I am in the right location. So if that helps out as an analogy, take it for what it's worth.
I will. All right, perfect. Thank you. Now, Jeff, looking at the SOX here, we've got a resistance band up above. We have visited that ledge in the 5,400 level on this indice a couple of times, and we have been beaten back. Now, there is an improvement in the trend here. We've got a 20-day lovely upsloping. The move has been fantastic. I think we're up almost 50%. Let me see here, 51% with today's action. So it's been a wonderful move off the bottom. We have cleared a horizontal level. I mean, Jeff, give me a reason not to be bullish here.
Well, I think the only thing that's probably on everybody's mind, that orange line, that red-orange line, what do we got? 1, 2, 3, 4, 5, 6, 7, 8, maybe even 9 times we've hit against that level. Yeah, that might be a potential resistance point, sure. So I think if you're somebody that's looking for a bearish argument, that's probably what you're looking for. Oh, okay, a bump against the 5,400 level, that could mean a pullback down. But in the meantime, if you're somebody that's short-term bullish, you could be continuing up from what, 51.28 or so, 51.29, right up into that level. Again, this calls out that point that we talked about earlier, Kevin. Look for that RSI. Look for that relative strength index. If we're coming into that orange line and you're not getting the RSI closing higher than it was previously, that could be an indicator, an early indicator that maybe not as many folks are buying into this, and we might want to be a little bit tighter, like Kevin said earlier in the show about putting on that exit strategy. Kevin?
Yeah, I like what you said there. And the other thing that jumps off this chart to me is that white line, and everybody's going to wonder, well, I know it's always interesting. You look at a shorter term chart and you see a line and you go, well, I wonder what that line is referencing. Let's go to a weekly on this and you'll see what it's referencing, everybody. We've had a beautifully managed uptrend working in here. This was the October of 22 bottom, and we rallied immensely, by the way, on the SOX. So, I mean, if we did a quick idea of maybe how much consolidation do we need, the group, Jeff, was up 184% over 93 weekly bars. So that's not small. I mean, that is almost 2 full years, but 180% is going to take some time. So we broke down here. But Jeff, I think the thing that stands out to so many is that this on a weekly looks kind of like an island relative to everything else that's occurred, doesn't it? I mean, look at how we gapped back above the trend line. We even tested the trend line for some. I mean, goodness gracious, this is just a far better reaction after a horrible 6-week window than I think we had any right to expect.
Yeah. Well, speaking of gaps, so going back into the statistics, I got to share this because it's on my mind. Gaps up helped 68% of the time, and indeed, this is no exception, Kevin. You've got a nice gap up, and then you've got that continuous bull movement afterwards. Now, question for you, as somebody that's looking at a chart, do we try to take in the narrative of what caused this situation, i.e., do we say, well, wait a second, that was a one-time news-driven event, we throw out everything that happened with that? Or is it, well, the news is what's driving and part of the market psychology? You do have to keep that in mind as you're looking at your technical analysis. Just curious on your thoughts.
I'm going to try and give a cogent answer to your question.
I love this.
This could prove to be a little difficult for me, but I think what matters, yes, price action matters, and the story as to why price did what price did definitely matters. As it relates to price, though, Jeff, the thing that I think a lot of traders lean into is what happened after, like on the day of that action. Meaning, if you think about historically, when we see rallies, a lot of traders will look at, for example, back on November 5. How did the market look on November 5 of 24, election day, and what happened after that? Because we learned something on election day. We knew a new administration, new expectations. We could watch price action and understand what thought process was leading the price action. And similarly, Jeff, when you get news associated with a space like semis, for example, when that news hits, we watch the price levels and then we look to see what happens thereafter. And can we get back through an area where news was digested negatively and then now digested positively, perhaps? Well, if you look at something like the Liberation Day, for example, go back to early April here, Jeff, everything broke down and then we're right back above it. So everything that was associated with the Liberation Day risk and concerns and what have you, this seems to be off the table suddenly. So, Jeff, I think you have no choice. News absolutely drives the market, but it is our job to kind of decipher and understand how that news is impacting price action and when that news is suddenly no longer having the impact that it once did. What do you think about that reply? I mean, I feel like that was a lot of words.
Oh my gosh.
But
if I could stand and give you a round of applause, buddy, and get everybody across this venue cheering, that was a beautiful, eloquently stated response. Nicely done, my friend. Yeah, thank you very much, by the way, for highlighting that, because I'm always curious, and Carol mentions this too. Do we just throw these events out? Do we keep them in there? I like the way you answered that question. That was very eloquently stated, my friend. Nicely done.
appreciate you, first of all, for teeing me up. Thanks.
Got it, buddy.
Jeff, okay, so we see we've got some relative outperformance here. In fact, semis providing some leadership again. So what we've seen leadership from is small caps and semis today. Semis showing quite a bit of leadership, as it turns out, 1.8%. Now, Jeff, one of the things I noted this last week was the drop that we've seen in the volatility index. It has been a massive just volatility crush. We have gone from upper 50s all the way back under 18 in here. And I know that traders are watching this, and I support keeping an eye on the VIX. I think it's a helpful method to understand how traders are feeling about the overall broad market. We're still a little elevated versus history, Jeff. Is there anything on the VIX that you're watching or keeping a close eye on here?
Well, I had read a statistic, and I'll leave it up to the viewers to look at this, but when the VIX goes above, I think the number was 30, it might be 40, but when the VIX goes above 30 or 40, on average over the next 100 days, the S&P 500 is actually positive, which I found just wait a second, that's almost the opposite of what I would think would happen. So I'm not sure how many days it's been, but you can keep an eye on that. One of the things, though, that is capturing my attention, Kevin, I think for a lot of traders out there, we are looking at when the VIX spikes, that is more of an opportunity than a gauge of long-term fear. So as the VIX was spiking, I know a lot of the clients that I've worked with throughout Southern California and Arizona, this was their moment to start selling a bunch of things and saying, well, let me bring in some premium. And by the way, options are not suitable for everybody. Got to make sure that just because we're talking about options doesn't mean we're suggesting them. Disclose. So what could that then be the takeaway for a lot of the viewers out there? Well, when you see this spike in the VIX, that's not necessarily a bad thing. That could be an opportunity for repositioning. So for those of you out there saying, well, the VIX spiked, it wasn't that long ago, and it's got to happen again. That's absolutely not true. You notice we had a VIX spike all the way back in August of last year. You didn't see anything above 30 for what, another, gosh, almost 9-10 months, something like that?
Yep.
So just because it spikes
in April.
Yeah, this does not mean there has to be a reversion back to an outlier mean. It's a reversion to the long-term trend mean, which is actually quite low, Kevin.
That's a really good point, Jeff. I appreciate that because I think we traders, we get a little too involved in the things that are at the just top of mind, right? When they're there, we start paying too much attention to that, and that's just not necessarily what we want to do. So I think it is notable that we're just kind of languishing in here. I think the area for monitoring is going to be back over 20. When we see the VIX back over 20, that'll be a bit of a departure from what we have seen, if in fact that plays out. But you know what? If the VIX is going to stay under the 20-day and just keep kind of meandering lower, as I love that word, I try to bring it in at least once or twice a session for you. If we can get back into this 15 zone, I think traders are going to continue to be comfortable deploying funds to the broader markets here, everybody.
Cool.
Jeff, we should look at a couple of interesting areas here in the commodity side before getting to some stocks in the news. Let's take a peek in on Bitcoin. Has made a pretty intriguing setup for a lot of traders, Jeff. Did get into overbought conditions with the last rally and then move to new highs. Is it potentially breaking a bull flag as we speak? Jeff, the other thing that I wanted to draw on here today real briefly was to quickly hit up gold and then brief off of gold move into silver, because silver made an incredible move last week. Now, gold is still appearing to be in the midst of a consolidation window here, Jeff. As you can see, we've pretty much just gone sideways with some higher lows along the way since early to mid-April. But silver last week, on the other hand, made an immense move through a major band of resistance, now potential support. And I thought that this was quite notable.
Yeah. Going back to what I had mentioned before, big, giant, tall pattern movements. Tall patterns, those with big price ranges between the top and the bottom, generally perform better than shorter patterns. They have an 89% success rate after an upward breakout, which we're seeing right here. Now, Kevin, I don't know about you. I don't know a lot about the silver market. So this would be an example of, I've got the when in the form of technical analysis. The next thing I would want to do as somebody that's looking to trade silver, get the why. Why exactly is this happening? And if that narrative can come to fruition in my research, great. Now I've got something moving here. But what would somebody be looking for? Well, you may take those previous up movements, call it mid-December around Christmas time, going all the way up till April. See if you can grab a measured move from that time, pop it on top of where that resistance breakout happens, and that might be your projection on where you could see silver going, Kevin.
Yeah, it's a possibility, Jeff. If we just defined it as, we give it easy numbers, call it 29 on the downside and 35 on the upside. You could add 6 to 35, could give you 41 for a potential measured move target for what could be considered a bit of a range breakout. Some would tell you it's more of an ascending triangle breakout, but ultimately do some sort of math if this is something you're watching and give yourself a target to shoot for, so that you can take some off and pat yourself on the back if you can get that run out of it. But right now, Jeff, it looks like it's in the midst of a strong breakout, and you can see continuation from Thursday into Friday into Monday. So right at all-time highs here on silver as well.
Yeah.
Okay, Jeff, let's get some stocks in the news here. We only got about seven, 8 minutes to go. A couple of the ones that I wanted to address briefly. There was an upgrade on Oklo, OKLO. And, this is a group that has been moving, of course. They provide clean energy, and they find themselves as part of the conversation around energy and the need to convert. This one in particular converts nuclear waste into usable fuels. And I noted the chart is kind of intriguing here, Jeff. It kind of looks a little, I mean, you tell me, does it look a little cup and handle-ish?
Right. I had the same reaction. I mean, your face said it all, right? I was looking at this chart. I was like, what a weird looking chart. Cup and handle potentially. It's got the time frame, which is what you'd want to see. You want to see about 3 to 5 months. There's your cup as it's coming down. It forms that movement, comes up. Then you've got that quick spike down. Now, what you're looking for is a close above, I want to say it's about the 55 level to be forming that next breakout. And that could be very, very telling. That's one of the bullish indicators that folks like to look at. Just a weird looking chart though, Kevin. I don't know anything about this particular company, but as I saw that chart, I just kind of tweaked my neck. I don't know if any of the viewers out there also did the same. So could potentially be a cup and handle. I'm curious on your thoughts. Is there a break above price that people should be keeping their eyes on with this?
Well, I like your 55.
Okay.
Because I think that is a clear level above which you say, all right, we've got the downtrend line broken there, right? It does look like this is a very deep cup. We're talking 59 all the way back to 17. So you're looking at a 40 plus point cup. You don't even have to look. We don't even have to title it as such. The pattern title is less relevant. What about what's just been happening here? Let's talk about it from this standpoint. Recaptured the 20. This is interesting to me because it recaptured the 20 on the same day that the S&P 500 did and the NDX did as well. So the NASDAQ 100, April 23rd. It's been above it since. We went ahead and did a very kind of a high flag or a stiff flag where the flag was really incapable of giving anything back in here. Then it gapped again, and then it gave you another bit of a bull flag kind of formation in here as the 20-day is getting caught up. Doesn't matter what we call it, Jeff. For a lot of traders, they're going to look at maybe the gap low we created in here, maybe the 20-day moving average. There's a lot of opportunity for layered exits in Oklo here, especially if you've been long since the 20-day got recaptured or since the 20 crossed the 50 to the upside. You could be looking at a wonderful trade and just trying to raise and ratchet your stops higher here. Again, I just remind traders that we don't need to give it the proper term. It's what we need to understand is how are we going to manage it regardless, right? Calling it the proper pattern doesn't matter. What matters is how we manage it. And I think the management process is the same regardless of what we call it.
Yeah, very well said. This is one I think I might be keeping an eye on, but just a very intriguing looking chart, very unusual in my experience.
So Oklo was upgraded to buy from previously at neutral by Seaport Research. They put a target on it at 71. That it represents everybody a 40% upside. Now we know that we can't lock into that upside at 71, but a breakthrough and new highs, for example, would be significant development for Oklo. So maybe put a pin in that one, certainly give you something to monitor. Just wanted to make sure we covered an upgrade. How about a downgrade, unfortunately? And I mentioned this one off the jump. So we're going to talk Tesla briefly here, everybody. Tesla was downgraded by Baird to neutral from outperform. They remain with their price target at 320. Argus downgraded Tesla to hold from buy as well. Now, according to Baird, they believe that that Mr. Musk's comments regarding the robo-taxi and the ramp rate are a bit too optimistic. Now, that's interesting to me because it's been Musk's approach. He's going to be a little bit more optimistic across the board in every assertion that he seems to make. So I can understand why Baird is feeling that way. Jeff, what are you watching here on Tesla? Obviously, the downgrade's not great. Horrible Thursday leading into Friday. But you did get a bit of a bounce here. I mean, are we at a potential support area?
Well, possibly. That beautiful purple line, I believe that's the 50-period simple moving average. If it can hold that, that would be great for those of you that are in the bullish camp. You also notice that lines up nicely with, we'll call it a 275 resistance level that it was hitting against, which also seems to coordinate with that 200 period simple moving average. So this could be an identity crisis moment. Are we going to go up or are we going to break down? Now, for those of you that are bullish, if you're holding a long-term position, the good news is you probably see a support level somewhere around 225 or so. You notice we hit 1, 2, 3, 4, 5, about 6 different times off of that level.
Yep.
So if it does continue to drop down, chances are, again, it depends on who you ask and how things shake out, but looking at what has happened historically, that might be your support level right there. Okay, so what do you have here? You've got a 1-to-1 risk to reward ratio, whether you're bullish or bearish. If you're bullish, where do you think it's going up to? That beautiful white line that Kevin showcased there, maybe it takes a pause at that 20 period simple moving average. If you're bearish and you say these downgrades are going to continue coming out, the fallout from what's happening with him and President Trump is only going to get worse, then you're looking for a potential drop down to that 220, about 225 level or so. Where might you put your stop if you're going to get in that bear camp? Potentially above that 50 period simple moving average, maybe even above that 200 period simple moving average, Kevin.
Yeah, I agree. I think that obviously you could find that to be, for example, if you thought today was bogus and a bounce was irrelevant, then you might use today's intraday highs at some point. It's a little too early to define that for some. But the other thing is, Jeff, if you're bullish, you know what? There's some good tails down here where Thursday's lows stopped, where the selling on Thursday quit just above 270. And so you could theoretically suggest from a risk reward standpoint that bulls have a trade here. If they think it can get back to the rejection level at 360, they would look at this and say there's still opportunity from the bullish side if you're going to stick with it only down to about 270, for example, right? You'd be risking 24, 25 to make maybe 65. That's much closer to that 1-to-3 ratio, but it does require the trader to have an exit nice and close because, again, Jeff, under 270, like you called out, it could be 50 points down, and that's a 20+% move or 20% approximate move. Not many traders are going to want to stick with it for that, are they?
Yeah, really good opportunity. Remember, everybody, plan your trade, trade your plan. And this is a beautiful example of why we do that.
Yeah, and I think the last answer or last comment there is opportunity could go either way, right? This doesn't mean we don't know if it's bullish or bearish from here. This is was a pretty significant pullback over a very quick 7-8 sessions here on Tesla. I think it certainly bears watching. But reminder, there's a lot of stocks that are moving a lot better than this one, as it turns out. The market seems to be offering a number of opportunities. So try not to get too siloed in what you're familiar with. Maybe continue to branch out a little bit, Jeff. The market seems to give us a bunch of opportunities. I'll tell you, as always, love having you on a Monday. Great comments from so many here who are glad to hear from you. So thanks for being here and sharing those thoughts, those insights, and those statistics. Some good stuff today, sir.
Of course. And thank you, as always, for having me, Kevin. Great way to kick off the week. I look forward to our next adventure together, buddy. Have a great rest of the day, too.
I know I'm going to have you back in a few weeks. So thanks to all of you for being here. Use that survey opportunity to let us know your thoughts. You can tell us some things that you'd like to see us be doing here in Trader Talk. Say again, thanks to big thank you to Mike Fairborn there in the chat. Make sure you're following us on X and hit that thumbs up button down below for us, everybody. That helps us a lot as we get this out into the archive for all of you. So hope you all have a great Monday. We got Scott Thompson coming up at 11 a.m. Eastern with his newest segment getting started on stock investing, or stock investing for beginners rather. So check that out if you are interested. Otherwise, we look forward to seeing you all again real soon.